The Employee Retention Credit was introduced as part of the Coronavirus Aid, Relief, and Economic Security Act, CARES Act, in early 2020. Keep watching to find out all about it. An overview. The U.S. government passed the CARES Act in March 2020 to provide immediate relief to Americans and businesses in response to the COVID-19 pandemic. The virus prompted a nationwide lockdown that severely impacted businesses, with effects that continue today. The CARES Act included the Employee Retention Credit, which is a fully refundable payroll tax credit. It applies to certain qualified wages that businesses paid to full-time staff from March 13, 2020 to December 31, 2020. The American Rescue Plan Act of 2021 then extended the ERC through the end of 2021. Lawmakers created this credit to encourage employers to maintain their payroll and not have to let anyone go. An eligible employer operating in 2020 or 2021 must have fully or partially suspended operations by governmental order or experienced a significant decline in gross receipts during a quarter when compared to the same quarter in 2019. Here are a few other important points about the Employee Retention Tax Credit. Qualifying amounts. The 2020 credit is equal to 50% of qualified wages, and the wage limit for each employee is $10,000 for all calendar quarters. The government extended the program for 2021 and increased the credit to 70% with a limit of $10,000 per quarter, raising the annual limit for an employee to $28,000. Qualified wages. Wages that qualify for the ERC are those paid to employees during the eligibility period, including health insurance costs. An eligible period is the amount of time a business was suspended per governmental orders, or, for 2020, a quarter when gross receipts were 50% less than that received in 2019. And for 2021, a quarter when gross receipts were 20% less than in 2019. Cash payment. The Employee Retention Credit is not an income tax credit and is treated a bit differently. It's not determined by your business income. The credit is typically issued as a cash payment that comes from the IRS and can be used to help with payroll tax payments. Eligible businesses apply by filing 941-X, amended quarterly payroll tax return, with the IRS. This form must be submitted within 3 years following the initial return filing, so businesses could have until 2024 to participate in the program. Now let's talk about some of the benefits of the Employee Retention Credit. Benefits. Lots of businesses are eligible. The pandemic negatively impacted many businesses, so meeting the requirements of a partial or complete shutdown as implemented by the government or a loss in gross receipts won't be hard for many to meet. Businesses can claim the credit right away by reducing payroll taxes sent to the IRS. You can request a refund if your credits exceed payroll taxes. And employers that received a PPP loan can now claim the credit for qualified wages that were not treated as payroll costs when getting PPP loan forgiveness. Just make sure you fully understand all eligibility requirements and the process for applying for the credit. It's always a good idea to discuss your situation with a professional. ERC Today is here to help with whatever questions or concerns you have about the Employee Retention Credit. We provide quick, easy, and flexible tax consulting services and speedy filing options, along with dedicated client support. Our team can help you figure out if you can apply for the credit in addition to your PPP loan. Contact us today. And if you enjoyed this video, be sure to like, comment, and subscribe.